The chemical industry is among those affected by the CN strike. The $58 billion sector, or $60 billion, let's call it, accounts for 14% of all Canadian rail traffic, with 80% of chemical goods carried by rail. Let's get some perspective on this in terms of the impact that it is potentially going to have or already having. For that, Bob Masterson is joining us. He's the president and CEO of the Chemistry Industry Association of Canada. Bob, thanks for joining us, and nice to be able to get your perspective on this very important issue. Just give us your view in terms of how this will impact the chemistry industry. What are we seeing actually right now?
Well, I think it's already happened, and some companies will have received notice from CN late last week and would have had their shipments embargoed as early as the weekend. And that's in particular for some commodities, and we think of chlorine here that's used to treat public drinking water, keep communities and water safe. You don't want tanker cars of chlorine sitting on siding in the event of a potentially lengthy strike. So those facilities would have already been shut in as of the weekend. And now what you will see over the next few days is a different phasing of companies. Those that have limited storage on site, they'll shut down very promptly if they haven't already. Some may be able to last 24, 48, perhaps at an outstretch 72 hours, and they'll have to curtail operations as well. This will have a significant economic impact on our sector, but also the sectors that we serve throughout the economy.
And just to be very clear, what other sectors are those? What sectors do you serve?
Yeah, well, you know, chemicals go into 95% of all finished goods, but in particular, when we think of the Canadian economy, the sectors we serve: mining, forest products, agriculture, agri-food. Now, in Canada, those sectors are also already disrupted by the strike, so it might not be an issue there. But I think the important thing to remember is that 80% of all the chemical production in Canada is actually exported. And so when you have the situation where Canada's goods can't get to the global markets, somebody else is going to step in and take those orders from you. So you're going to lose that business. This isn't a case of just deferring that business to a few days or months down the road. You're going to lose that sale today, and that's going to represent a loss to these companies.
Bob, why aren't these chemical manufacturers seeking alternative modes of transportation?
Well, there is no plan B, right? In most cases, most facilities, not just in chemicals, but in most industrial activity in Canada, you're served by one rail, CN or CP. So if CN's on strike, there is no ability for CP to move in and take that. Now, there might be a few instances that a company will either be served on site or nearby with the opportunity for both railways, but that's not typically a commercial arrangement that allows you to switch immediately from one to the other. This is something that you're served by one railway. If you don't like it when your contract's coming up, you may choose to work with that other railway, but it's not something like in the retail market where we go in one store, don't like what we see, and we pick another one. These take weeks, if not months of negotiation. Times it takes special training on how to handle the materials involved. There's no plan B with respect to switching from CN to CP. And then finally, we think of road. Yes, in some instances, very small instances, that may not be an option. But we're talking about enormous volumes of product here that simply can't move by road. And in many cases, we're talking again about products such as chlorine for safe drinking water, that it's not legally responsible to ship by road. That has to stay in well-secured tankers on the railway. So there is no plan B. Plan A is to make the rail system work, and plan A is when it's not working for the federal government and all the stakeholders to get it back to working order as quickly as possible.
Which I wanted to get to, just given the dynamics of your industry, the chemistry industry, to your point, there is no easy plan B. It is all about plan A. What do you want to hear, though, from the federal government? Because they basically are monitoring. They've said that they're monitoring the situation, but they do not seem to plan to legislate to end the strike. Your response would be what to that?
Well, I think the first thing is for the federal government to communicate, and I think they have started to do so, that they're aware that this strike can have very serious impacts on the Canadian economy writ large. And when that message is delivered loudly and clearly, I think the parties involved will understand what follows next, because there's no question the economy is in the public interest. If the economy is going to suffer, and it will very, very promptly, then the federal government's obligated to initiate action. That can take time, though, right? And I think the thing people need to remember is even if the strike ends today, CN will have a triage plan of what commodities get shipped first and for what purposes. Again, back to things that keep the public safe, keep homes heated in the winter. Those products will move first. Every day the strike goes on, you're talking about days, if not weeks, before facilities are back to full operation. So we would expect the federal government, even if they're not publicly announcing it, is certainly working on what measures they're prepared to take if the two parties cannot complete negotiations in a very short order, and we mean tonight.
You mean tonight? That's interesting.
They need to complete these negotiations, right? I mean, you think about this, the parties have said this isn't about wages. This isn't about being far apart on wages. These are a relatively small basket of issues that are no doubt important to all the parties involved, but they're not worth taking the entire Canadian economy hostage for. And we think the federal government will see that there's a public interest in keeping the economy running properly.
Yeah.
We do not want to see the federal government impose legislation, impose an agreement on parties. That's never a good idea. But certainly in the public interest, they can order a cooling off period. They can order workers back to work under the current agreement, and they can order both parties to maintain their place at the negotiating table. That is something they need to be prepared to do. It will take time to call Parliament back and to develop that legislation and put it in place. So we would hope it's being thought of now and not just resting on the probability that a negotiated settlement will occur.
But Bob, you're saying that you want something determined tonight. What could that look like? A cooling off period? What would that look like tonight?
No, I'm saying we are looking for the parties. Our understanding is that the parties remain committed to negotiation. They had a very lengthy night last night. We understand that they're either back at it now or they will be shortly this evening, and we expect that they will return in the spirit of good negotiations and be able to reach an agreement this evening. If that fails, my sense is we need to see the federal government act very quickly. We're at a critical time for the agricultural community and getting its products to the global market. And we're also, and you've talked about it on your segment today, the economy is showing lots of signs of softening. We certainly saw that with the action CN took to curtail some workers and some of their activities. This is not a good time to have a prolonged strike in the rail system, which will impact the entire Canadian economy.
Right. On CN's front, just to review for our viewers, they had announced job cuts as well. And we've also seen volumes for the most recent quarter to date at CN down by about 11%, give or take. So you're right. We are already seeing a slowdown just from the industrial rails. Let me ask you this as well, though. With respect to this situation, if we don't get some type of near-term resolution, what do you think that does to foreign investors' interest in Canada?
Yeah. Well, for various reasons, this is now our third year in a row that Canada is experiencing disruptions in its rail service. You could have blamed the past two perhaps on weather or other factors, but there's no question this is the third year in a row. So I think our worry in the longer term, medium term, is twofold. One is our global customers. Again, in our industry, 80% of everything we produce goes to global markets. At what point do our global customers start to ask the question, is Canada a reliable trading partner? Can they get their goods to market? And then second, as a sector, we're growing tremendously all around the world. We've started to see investment in Canada. We have about $15 billion of new investment underway, but that's a shadow of what we should be seeing in Canada. And one starts to wonder, if you're that global company and you're thinking of making your next $10 billion investment in the chemistry sector, is Canada the right place to put it when year after year we're seeing these disruptions in rail service? We have to remember most of our industries in Canada, very few of them are actually on tidewater, as in the case in the US and many other countries. So we have to rely on a well-functioning rail system to get our goods to tidewater so they can be traded globally. And there's some longer-term questions about Canada's reliability as both a place to invest and a reliable trading partner in that regard.
Bob, when you talk about $15 billion of foreign capital in Canada's chemistry industry being a bit of a shadow or a fraction perhaps of what it could be, what could that number be?
At least double that. We have seen nearly $300 billion of investment in the U.S. chemistry industry over the last 6 years, and following historic patterns, we should have seen 10% of that. We should have seen at least 30, if not 35 billion. So the investments have started to come. We have a number of large investments, one in Ontario, 2 in Alberta already underway, and a few others announced, but there should be much more activity going on. And it's no surprise the last government, the finance minister, his special advisory committee, the so-called Barton Committee Advisory Committee, they have sounded the alarm. Canada is falling short on foreign direct investment, and from our perspective, we raise our hand and say, chemistry is the case study. We can and we really should do better. And as the 3rd largest manufacturing sector, the government and all stakeholders should be asking, why is it not coming? We've got the resource, we've got the workforce, we've got the infrastructure, we've got the experience. The money should be coming here to this sector in Canada at this time.
Well, Bob, that was going to be my next question, which is why wouldn't we be seeing more? It can't solely be attributable to our rail system, can it?
No, not at all, but it is an important factor. Transportation costs are a significant factor in Canada when you do have to move your product to market. It's a range of factors, and I go back, we're dating ourselves now, but if you go back to the Barton Commission that was done, the report that was done for Minister Marneau, there were a wide range of factors. Canada's Chamber of Commerce has also put out its reports. Goldie Hyder's group has also put out their report, and there's a wide range of factors. And I think we saw in the last election.
Bob, what are the top 3? And I do want to get your take in terms of what we saw in the last election, but what are the top 3 that we could actually make changes happen and not continue to lose to the United States?
Well, number 1 on most people's list would be regulatory competitiveness. We continue to have a smorgasbord of regulations between the federal and provincial governments. They often overlap, they duplicate, and in many cases, they don't add a lot of value. And Canada, you've seen at the OECD ratings, we used to be about in the top 5, top 6 in terms of regulatory competitiveness. And I think the latest number, we're down to number 28 in the world. It's not so much that we've got worse, but other people have intentionally put in efforts to make sure they have effective regulations that achieve their objectives and do so in a way that will enable the economy to grow. We haven't paid attention to that in Canada, and we're showing the price of that. Secondly, you could say the exact same thing about Canada's tax system. We've got a smorgasbord of different tax incentives and credits, etc., but nobody has stepped back and taken a look fundamentally at how the tax system works, either for corporations or for individuals in Canada. And we've lost ground to those nations that have done so. So those would definitely be on the top 2. And the third that you often hear are certainly the infrastructure issues. And the last government, the current government, has pledged significant amounts of public money towards infrastructure. But the process has been slow. All stakeholders have a role to play in that. But we lack infrastructure. And you think of even when the railways are not on strike, we still have some choke points, especially in Western Canada, getting goods to market. So those are top 3 that would be on our mind: regulatory reform, tax reform, and infrastructure in Canada.
Bob, you know, it's so interesting to talk to you about this today because I don't actually talk to chemical companies here in Canada very often. I think that many of them are privately owned or perhaps part of other holding companies of sorts.
That wouldn't quite be true. Many of them are Canadian operating entities of global multinationals.
Right.
And so they will be publicly traded companies, but very few of them are publicly traded in Canada.
Right. Not on the TSX. I guess my follow-up question would have been, or is, we talk a lot about the Canadian energy companies and ones that have decided to re-domicile to the United States. Obviously, these are your members. I'm sure you wouldn't want that to happen, but are you hearing any rumblings of that? Is that a concern, just given all of the, some of the obstacles you've just mentioned?
No, again, it would play out in another way. These are, in our sector in Canada today, for the large part, these are Canadian operating entities of global multinationals. And so when companies talk about competing for investment, it's not company A versus company B, it's company A within their global operations.
Right.
And Canada, we have a lot of things going for us. This isn't a moonshot. We're often in the list of the top 3. We could go to Canada. What does that look like? But the problem is we never win, or we don't win often enough. And it's not the Olympics. Olympics. There's no silver medal, there's no bronze medal, it's all or nothing. And so what we see, and you could take the chemistry sector in Southwest Ontario would be a very good example, it has not seen significant reinvestment in certainly over 2 decades. And you start to question what's the long-term outlook for that sector without that investment starting to come into Canada. We're seeing reinvestment in Alberta. We haven't yet really seen much in Ontario with one exception. So it's not a question of relocating activities, it's running the operations as they are, but it should worry everybody that the investment is not flowing into Canada at a time when it's flowing into this industry all around the world and in the United States in particular.
Bob, great to speak with you today on this. Thank you very much for your time.
Thank you, Catherine, for the opportunity.